All right, so basically, I'm gonna try to do this one just to see if we can make it brighter. But basically, we're gonna see just a couple of scenarios, just using I guess this right here would be July's data, and we'll chart each of the points, and I want to show you something interesting. So let's start here, July the 14th. All right, so when we look here at July the 14th, we can grab our Fibonacci lines, and we're just gonna say, oh, that's not Fibo, is it? Hold on. Grab our Fibo line. I'm gonna show you why I use this so much in predictions, and we're gonna say that, hey, we have this area right here, but instead of trying to chart the near term, let's see if we could have bagged up and picked up this one, because what we're looking for is a high and a low. And so for this particular Fibo area right here, what we're gonna do is say, hey, here we go. This high right here, see if I can swap it and put it there for a second so I can show better. All right, so this high right here, this one, and we're using this low right here, this one. And so when we're using that high and that low, what we're looking for, we're saying, hey, the high right here on this candle that was produced and the low on this candle right here, we see that. Where's our entry? If it were me, I would be looking for an entry at somewhere. Oh, wait a minute. I didn't fully draw that. My apologies. Trying to do too much on the iPad, I guess. All right, so like I said, the high on this candle, the low on this one that was generated, what would I be looking for? Is actually this line right here and the 50. But more than likely, I would say I'll be willing to take a position in between these 2 points. So when price gets back between these 2 points, I want to enter a position short. And the reason that I'm going with a short bias is because the overall trend, if I can draw it out here, as you can see, the overall trend is down, right? And so there's no need for me to fight the trend. I need to look for entries into the trend. And so for that particular sector, that's how I would do that. And I would be looking for entries right here around the 3.82 line. Now, the reason I look for the 3.82 is because the way that the 61 and the 50 look on the chart, if you pull back 61%, that's not really what it's showing. It's actually pulled back to the 618. So it really only pulled back 38%. The 50% line says it's pulled back 50%. The 38.2 line is saying that it pulled back 61%. And so I believe that a pullback greater than the 61%, which is actually the 3.2, the 38.2 line. I believe that that particular area is a greater interest for me as an entry between the 50 and that line than it would be for any other spot. And so if you notice, if you had taken the 50% line right here at the 1.028 area, the highest that it would have got to was $3.62. Now that is about 70 or 80 pips within that area. You see what I'm saying? But and the area that I'm talking about is this area right here. When it made these moves right here with these three candles, that would have been 80 pip drop. But that's the best part about knowing bias, right? And knowing how well the stop is. Because when you drew this line, these other candles did not exist, right? In theory. So this will tell you where your stop is. And look, it took several days of bouncing sideways in this area right here. Oh, let me bring it down so get it accurate. This area, it took several days before it got to this area, but that was an area of interest for us, right? But I want you to notice that when we get that 38.2 area, look, we came right to the 618. at the 161 line. And that is a great opportunity to produce those results. But let me show you something again. We produced a new high here. Oh, let me go back to the arrows. We produced a new high here. An equal low, but look, a better low, right? So if we were to take this same low and we just move that over just like so, and we move this just right there. Now we'll blow this up so we can get a better clarification of what we see while still maintaining the 618. Now, see if I can get that. Yep, there we go. We use this high on this candle. We use the low on this candle because that's the new low that was generated according to this time period right here. I want you to notice something again. 3.82. 38.2, I should say. And we came back down to the 161 line again, right? So using that particular theory, let's make kind of a prediction. Not saying, and this is all for information purposes only. It's just something I enjoy doing. But I want to show you something. What if that was the low? And this, my friend, was the new low. So grabbing that arrow again, using the high of this candle and the low on this one. So let's drag it just a little bit more. Right there. So let's say that we use the high on this one and the low on this one. And I want to show you something. I may have to drag this over more just so that you can see the 8.2 area. There we go. And so when we look at this area right here, the high, and using this low, and like I said, we just drew this on the near-term trend, what do we see? We see the same crash at this level, 38.2 again. In other words, a 61% pullback. When you get the 61% pullback, we have seen time and time again that we can use this level as being a measure of where price could be headed next. Now, that seems far-fetched. Only time will tell. But that's the beauty of using Fibonacci lines and using the other data. Right now, that is over 600 pips away almost. 600. On a $2,000 investment, that is a profit potential of $6,000 on that move. So regardless of how you look at it or going by a point basis of what can happen, we're just saying that within this term, that is a possibility. Now, you could also come here and say, well, it kind of made a lower high at that point. Even at that point, the 618 line puts you at 92.42. And that line is generated right here. So even using that as a potential line, that shows us right now at this given point, the euro should travel further down against the dollar. Remember, this week is very powerful for the dollar because this is the week where interest rates are declared. And this is when that information will come out. And I'll show you some information on that using trading economics. And I use this particular platform right here just for a quick glance. And as you can see, I got a lot of that data already pulled up. And what I wanted you to pay attention to, I'm about to highlight it here because I'm using an iPad. And it's about to die, actually. But right here, this rate right here shows an 8.3. The consensus is an 8.1. What that means is that the consensus is what you have other analysts looking at the market and they're saying this is what it is. The 8.3 is what it was last time. If the mark comes in greater than 8.1, but below 8.3, that is still bullish for the dollar. If the value comes in at 8.1, exactly on the consensus, that is a neutral standing almost. In other words, the market is saying that it has already priced in the drop, which is the drop that we're seeing right now in this particular area. It's saying that it's already priced that drop in. And so you likely may see a bullish bounce toward the euro. In other words, they nailed it right on the spot. So you won't see a further really hard tightening of a basis point greater than 0.75. The other area to pay attention to is the core inflation rate. As you can see here, the consensus is 0.65. I mean 6.5. Previous was 6.3. If we come in greater than 6.3 and less than 6.5, that is still bullish. Above 6.5, of course, is bullish. And we have this information that's coming out the 12th, the 13th, and the 14th. This right here will start the next trend of what is to happen next. If these numbers do like they did last time, the euro will fall even more than it did this time. And that's the last time that this period was in, is right in here. That is the drop that you see. That is the euro doing the bounce. This is the secondary drop again when those inflationary numbers are starting to come out. So right now, we're within that time period where this can go. And I know on the video I recorded earlier, it was showing 52 pips of 0.9752. Notice that it's already a 0.9733, but I want you to pay attention to the fact at the very top, in this area up here, let me see if I can drag that up here so you can see. In this area up here, this is where you can see the low. And I'm going to put it back on the candle, and I want you to pay attention to the low is a 9724 already achieved today. So this is just a little bit more information. Try to see if I can get some of the blurriness corrected. Trying to also keep the audio part corrected. If this doesn't work using the iPad, what I end up doing is just swapping to my laptop and just record everything on the laptop. And then we can go about doing it that way. But thanks again, guys. And I'll just send this one up there right quick for you guys. And y'all have